Crypto YouTubers have been running out of ideas over the last couple of weeks, so fortunately Bitcoin has come to the rescue and provided us with a massive flip opportunity in the cryptocurrency markets. Now, enough of that hopium. Let's look at the charts and just see how much this has destroyed the gold bugs. And of course, we'll look at those major critical price levels that we were calling for in yesterday's video. So make sure you have smashed up the likes and subscribes, bell notification icon. Let's dive in. It's been 2 weeks since we have been getting ready for a pump. We've been following it on Bitcoin. And of course, while the market is down, we have a bearish sentiment around the total market. It's going to take longer for these moves to develop and then obviously break out. Yesterday's videos, we were looking at two key levels on the total cryptocurrency market cap and the cryptocurrency market cap minus Bitcoin and Ethereum. So basically all of your altcoins. We'll look at that on the chart and then update those critical price levels for the next targets that we're looking for this market to continue on in a bullish sense. The fear and greed is up. We've hit 33, and that's a good sign. Even though we're still in fear, we're out of the extreme fear for now. That leads us to a 18.5% return on our Bitcoin. So this is a Bitcoin fear and greed plan. You guys have been seeing this on the channel a little bit now. We're buying on those fearful times of Bitcoin, 15 or under on the fear and greed plan. So that gives us an average price of $35,473. And as I said, the return's now 18.5. So just following this plan, you could sell out of everything now. I'm not saying do it, but you could, and you'd have 18.5% using this plan. The NASDAQ is holding up. It had a nice strong bounce at the most fearful time, 24th of January. The news was out there. This was the showdown that all of the doomsdayers were waiting for, that this market was ready to crash. It was over. And we bounced from that point. That's usually what happens when we see that really, really negative news. Then we got this nice little sweet higher low on the 28th of January and then rejected just a few days ago at the 50%, but potentially putting in another higher low here at the moment. So we had the low, a higher low, potentially a new higher low. We have to wait to see what the next load of data that comes in says. And then this is just building that case for the bigger picture to start to shift more bullish. Of course, the breakout here is 15,300. Now to the total market caps, which we've been following, and look at how beautiful that is. 4th of February, 50%. It sliced through it. 1.76 as a round number. We're looking for 1.8 trillion. We've got to close at 1.857 trillion. And now we're attempting these next levels. So the lows at the 1.9s and up around that 2.1 trillion. If we move our 50% now that this one has been broken, it's cleanly sliced through the highs. It sliced through the horizontal resistance that had shown up for the last year at that level of 1.8. So at the moment we're above that and we broke the downtrend. So this is the flippening of the market for now. Not saying this is the overall bullishness for the macro view to head up from this point and call this a major low. But this is a good sign. This is definitely a good sign for the time being. You can see this one here was just quite weak. It could not break out of the downtrend. Just came above. That's a really good rejection on the 27th. So pay attention to that sort of pattern in particular. Couldn't close above these levels and then fell away from that point. But this one broke above, closed above, and the next day starting to push up again. So we're getting closer to that 1.9 trillion as well. So let's move the 50% up to the next range. Again, that sliced through that number as well. And we'll go to a bigger time frame using the $2.5 trillion level, which gives us a number at 1.988. For a round number, let's call it 2 trillion. So a nice clean round number for everyone. $2 trillion is our next target for the market to break above and consolidate. So no doubt we'll probably get up there and find some temporary resistance. So we'll keep that in mind as well. All right, this is the total market cap minus Bitcoin and Ethereum, as well as the total market cap. This one also sliced through nice and cleanly from our yellow line here that we were looking at on yesterday's video. That level was around the 700 billion. So the halfway point above this is 760. The next overhead resistance levels I'm looking for, so the levels above that we're looking for, 760 and 806. So I'm looking at a nice round number here of around 800 billion. And should we start to break out of this zone here, then I'll just move my tool back up to the top, providing this low remains, the 600 billion low remains, and that's around 867 billion. So how am I using this from this point? Ideally, if this is to be the low, then the next market action is to hit a resistance level at some point, whether it's there or it's 860 or 900. But the next low is going to be the significant level here, because it needs to be a higher low for the market then to push up again. But if we start to come up, get rejected, fall back under, and then work our pricing levels out at these lower levels, we're probably going to see lower prices. That's the key that I'm looking for, the higher low to come in and the market to progress into that bullish state again. Check it out back here as just one of the most recent examples. You had the low at June, the market pushed up, higher low, and the market starts to push up again, breaks tops, pushes past resistance levels. Breaks some more tops. You can see that there, and then again, and it keeps pushing up higher and higher. Then it had a higher low, and of course the market took off again. So that's what we want to see here on a smaller term time frame to continue building this bullish aspect to the market. Now for the big one, Bitcoin, it broke out of the blue downtrend line nice and cleanly on volume, and the close was high on the bar, meaning people continued to buy up into the close of the market. Got above these resistance levels that were pushing the market down at 38,500. It got past the 50% level. This is a beautiful, clean bar that you want to see in your bullish patterns. So that's a nice, clean trade that you want to see, that higher low, good volume going into the breakout as well. Now that we've got the break, and we can move our 50% levels to the 27th of December, and we're at 42,500. And it's interesting that you can see the market now just starting to hold up at around that 41.5 to 42,000 as well, as we attempt to break through the next resistance levels. The simple rule in investing is to buy low and sell high. But as you can see, just even the last few weeks, it's so difficult to buy those lows. The fear is at the most extreme. It's coupled in with so many other pieces of news, like the NASDAQ was crashing, S&P was crashing. We were going through the next round of the variant, and everyone was finding it very difficult to get into the markets as the markets were at their lowest point. However, looking back now, in hindsight, even just a few weeks, we can see that we are now up at least 10% from those purchases that we're looking at with the fear and greed plan. If you're interested in something like this, by all means, check out the headlines, create your own document here. Otherwise, check out the link in the top of the description for Patreon. Everyone got a copy of this spreadsheet that are in Patreon. Otherwise, let's continue on with where the market is going from here and looking at some of the cryptocurrencies as well. And this one is Ethereum, one of my favorites. So we've seen a turnaround at the moment. We've got a little bit of volume, nothing extreme like we've seen in the past. This isn't to say that this is the final low, because I still see us underneath the major trend line here, underneath the 50% level of the move up. But at least we have found some support on $2,400, and we've got the weekly closes. So the bigger term timeframes have all closed above that level at the moment. So this third one is looking pretty good. The next stage I would look at is a breakout of the downtrend, and hopefully some breaks of all of these $3,000 levels, the 33, the 34, and the 3,500 level. There's a lot of resistance overhead at this point. So even if we see a rejection, we definitely want to see the bleed slow. Doesn't matter if the market comes all the way back down. The major thing here is that we get a higher low than what we saw on this bar here at 2160. That's the most important piece here for Ethereum. As for ADA, it's still doing not much. It's hanging out at these lower levels. It's trying to climb back. $1.20 is my next target. And then again, pretty much every 10 cents from there, $1.30 and $1.60 is the major point here. The downtrend is still in play. And I think this might be the attempt that we head to that blue line again to attempt breaking it. Whether we get there or not, we'll see. And ideally, if we get a higher low, then I think we will break that blue line. The higher low is going to show that strength in the market to get us back above that point. But as you can see, that might take 1, 2, 3, 4, it could be 5, 6, 7 weeks from now, just looking at where we currently are in relation to the blue downtrend for ADA. Of course, these markets can always get ahead of what we're expecting, so we'll continue to follow up with ADA. DOT is also finding some good ground here, and it's broken out of the downtrend. This downtrend has been going on since the top in November and has not been able to cleanly break out of this. It had one attempt 10th of January, so the week starting the 10th of January, close above, rejected, and we headed back down. This time it looks like we should get a close above there, and we're now attempting to break the 50% of this current range here. So this is a short-term time frame. It's on a daily chart, and ideally once that breaks, I'm going to throw this back to the top. The next number is 24.30. So I think this is going to be the stage where we attempt some higher prices, get rejected. That is going to be the key level for all of crypto. If we can manage a higher low and then start to work our way higher. That's what I'm waiting for, and I think that could happen February, March, potentially April. So it could be some time, probably sooner rather than later. Other thing to note with DOT is that the blue trend line is holding up. We got pretty close to it, didn't get a bounce on it, but at least we held above it, and this looks like a better reversal. Some nice high closes on the weeklies, and then we got the breakout. So all things are looking positive for DOT. Bitcoin has finally flipped crypto, and we can continue using those words in our YouTube titles. If you want to trade on a no KYC exchange, check out Bybit in the description. Thousands of dollars sign-up bonuses, and SwiftX for the Aussie guys, $10 of free Bitcoin when you sign up with the link down below. Thanks again for joining me. Like, subscribe, and share this with a friend. See you at the next one. Until then, have more fun to get more done.